Under non-profit organization, we don't consider as profit. We consider it as what? Income. In case of admission of a partner, 3 things you are supposed to prepare. Which are those? Revaluation, partner's capital, and the last one is balance sheet. In the question paper, they have not mentioned any ratio. We have to assume that the partners share their profit and losses equally. A warm welcome to one and all. This is your Arasa here, lecturing Vidhyaashram Pre-University College, the Temple of Excellence. Now we are discussing your model paper part 2. In the part 1, we discussed about all your 1 mark, 2 mark as well as 6 marks. And in part 2, we'll go with your 12 mark questions in detail. Now, so in your model paper part 2, we'll go with 4 questions of 12 mark each. And one more part is there, that is called as part 3. In that, we go with your remaining 12 mark as well as your POQ questions. Now, we are going slow one by one. The reason is, not only you have to watch this video, you have to understand each concept. While doing every problem, each and every problem, I'll go with the concept. Please understand the concept. Only the numbers will change, but problem will be as it is. Now, first question, your part D. Answer any 4 questions. Each question carries 12 marks. So, each question will carry 12 marks. So, we are going to attend your 12 mark questions now. Following are the balance sheet and receipt and payment account of Golden Sports Club. These are the information they have given. Which problem is this? How to find out? I'll let you know. Wherever they have given sports club, this is what? Non-profit organization. Now, receipt and payment account they have given. All the details are there. You are supposed to prepare what? All the informations are there. Along with that, prepare income and expenditure account for the year ending 31st March 2021 and balance sheet as on that date. Income and expenditure in the sense what? Non-profit organization. Now, we'll go one by one now. Before we start income and expenditure, what is the concept you're supposed to remember? Now, I'll go back to your question now. They have given balance sheet. They have given receipt and payment account. And they have given adjustment. Now, the concept is very simple. Whatever they have given in the balance sheet, whatever they have given in the adjustment. Now, this will be particular. This is not the format, just it is a idea how to do your calculation and basic logic. If you remember this, easily you can do your non-profit organization problems. Now, anything given in the balance sheet. First one, year. Whatever given in the balance sheet, previous year. Whatever given in the adjustment, current year. Whatever given in the balance sheet, that is previous year, and whatever given in the adjustment, that we call it as current year. In case any outstanding is given. So, any outstanding is given. If it is there in the balance sheet, remember you are supposed to minus. Anything given in the adjustment, you are supposed to add, because current year has to be added, previous year has to be deducted. Similarly, prepaid or advance. Balance sheet should be add. Anything given in the adjustment should be minus. So, this is a logic you are supposed to remember. Again, I'll repeat. Balance sheet, it is previous year. Whatever given in the adjustment, that is current year. Any outstanding, if it is given in the balance sheet, minus, subtract. Anything given in the adjustment, addition, add. Prepaid or advances as per the balance sheet, add. As per the adjustment, minus. Remember this, your 90% of the logic or 90% of the concept we have done with this chart. Now, we prepare income and expenditure. From the income and expenditure, we prepare what? We prepare receipt and payment account. From the receipt and payment account, whatever given in the question paper, we are supposed to prepare what? Income and expenditure. Now, under income and expenditure, remember, only we are supposed to consider revenue items. Revenue items are else recurring items, repeatedly happening. Like what we consider under income and expenditure, under receipt and payment account, both the characters will be there. One is recurring, non-recurring. What is this recurring and non-recurring? I'll give you idea for that. What is recurring and non-recurring means? For example, salary paid, recurring. Why? Because in a year, 12 times you pay salary. Every month you pay salary. There is a reason we call it as recurring. Rent, recurring. Printing and stationery, recurring. Postage, recurring. Interest, recurring. Why? Because in a year, many times if you make this payment, many times you receive this amount, then we call it as recurring. Now, non-recurring means what? Purchase of furniture. Will you purchase furniture every month? No. Purchase of land and building. Purchase of motor car. Deposits. All comes under what? Non-recurring. So, under income and expenditure, just think that should we consider or not? If it is repeatedly happening, please consider. Hope you are clear. Concept number 1, concept number 2. What we should consider for income and expenditure? Recurring. Which are the expenses or income repeatedly happening? That kind of expenditure or income you should consider. Now I'll go to your answer. Now before that, see your question. There is a receipt and payment. Now see, salary you should consider, yes, because it is a recurring. Sports material, will you purchase every month sports material? No, don't consider. Investment, will you do investment every month? No, it is all non-recurring. Postage, yes. Electricity bill, you pay every month. Upkeep of ground, what is upkeep? Means cleaning, you do every week, every day. So these are called recurring. Balance carried down will not come. Balance brought down will not come. What is this means? Opening cash balance, closing cash balance. Then subscription, yes. Every month we collect subscription. Then entrance fees, we have to see the adjustment. Sale of old newspaper, yes. Sports fees, yes. These are the things we have to identify whether it is a recurring or non-recurring. Now, go to your answer. See, subscription we have taken, entrance fees we have taken, sale of newspaper, yes. Sports fees, yes. Similarly, salary, yes. Postage, electricity, upkeep of ground. Along with that, we have depreciation, means expenditure. Hope you are clear. This is your question. All the receipt 1, 2, 3 we have taken under this income and expenditure. Now, all the payments what we have only recurring we have taken under payment. Hope you are clear. Along with that, we have to see the adjustment. Now, go to your balance sheet. Under balance sheet, you have outstanding salary. 7,000. Outstanding salary 7,000. You should minus or add. I'll tell you the logic. Outstanding salary where? It is in balance sheet. Now see, outstanding. If it is there in the balance sheet means what? Subtract. If it is there in the adjustment, outstanding, if it is there in the adjustment, add. Hope you are clear. Now see, as per the balance sheet 7,000 minus, as per the adjustment 5,000 add. I'll show you the answer. Salary less 7,000, add 5,000, your answer is 23. Hope you are clear. This much only your concept. Just check your balance sheet. Any outstanding, minus, adjustment, any outstanding, add. Your problem is done. Similarly, we have done for subscription. Entrance fees, go to adjustment. Half of the entrance fees to be capitalized. What is the entrance fees here? 6. You take only half, 3,000. See, they have taken 3,000. Now add everything, 72,500, 72,500. From that, if you minus all this, you will get 32,200. What is that? Excess of income over expenditure. That is nothing but your net profit. But under non-profit organization, we don't consider as profit. We consider it as what? Income. That is the reason we use word called excess of income over expenditure. Now, we are done with this. Now you go to balance sheet. Your outstanding salary as per the adjustment, double effect. Whatever is there in the adjustment, double effect. Anything outstanding comes under liability. Anything prepaid comes under asset. Whatever is there in the adjustment, double effect. Now, capital fund, 1,85,700. We'll go back to your old one. What was your old capital? Balance brought down, subscription, entrance, sale. There is no capital fund. What is your profit? 32,200. Along with that, is there any donation or something? No. So these are the things: subscription, entrance fees, sale of old newspapers, sports fees, balance brought down. Now, come to your credit side. Cash in hand. What is the cash in hand? The cash in hand is your receipt and payment account. What is the balance carried down in this? The balance carried down is 19,500. That is your closing cash balance. 19,500. Sports material, furniture, land and building, investment, outstanding, subscription, because it is a received in advance. So that is the reason we have taken under this. Clear? Yes. So what is the total now? 19,500, 44, 21, 90, 15 and 1. The total will be what? 1,90,700. If you total this, 1,85,700 plus 5,000, your answer will be how much? 1,90,700. The total should match. Now, these are your receipt and these are your balance sheet. Under balance sheet, see, they have already given your outstanding salary, pre-received, this one, subscription and capital. So pre-received subscription is this one. Your capital is how much? 1,50,500. Now, come to this 1,50,500 plus, what is your profit? 32,200. 32,200 plus, what is the entrance fees? Entrance fees is 3,000. Why it is 3,000? Your entrance fees is 6,000. We have taken only half. What about remaining? That we have to consider. Plus 3,000. This is what? Entrance fees. Total it is 1,85,700. Hope you are clear. How did you get this 1,85,700? Your as per the balance sheet. As per the balance sheet. This is as per income and expenditure. This is as per your entrance fees. If you add all these three, you will get 1,85,700. Now, I'll go to problem number 2 now. First problem is always what? Non-profit organization. Now we'll go to the second problem. The second problem is A and B are partners in a firm. Their balance sheet as on 31st March 2021 was as follows. Now, they have given all the information, yes, and they have given adjustment. In that they have mentioned admitted. In case of admission of a partner, 3 things you are supposed to prepare. Which are those? Revaluation, partner's capital, and the last one is balance sheet. Again, I'll repeat: revaluation account, partner's capital account, and the last one is what? Balance sheet. First, we'll go with revaluation. Before you start your revaluation, I'll give you the logic how to do that. Your revaluation is very simple. If any assets are increased, any liability are decreased, we'll go to credit side. Ulta. Any assets are decreased, any liabilities are increased, it will come under debit side. Then along with that, if there is any expenses or if there is any bad debts, will come under debit side. This is only called as revaluation account. What is this? This we call it as revaluation account. Now, after revaluation account, we'll go with admitted into partnership on the following terms. All the informations are given. Revaluation account, partners capital account, new balance sheet. We are supposed to prepare now. In this, he brings 60,000 as capital and 20,000 towards goodwill. After that, it is all about your partner's capital account. Means second, first we are preparing what? Revaluation. What we should consider for revaluation? Any asset or liability, if any changes happen, then only we should consider this one, revaluation. Again, I'll repeat, what we will consider under revaluation? Any changes in the asset, any changes in the liability, along with that, if there are any expenditures, will come under revaluation account. Now, depreciate furniture by 10%. Furniture means what? Asset. Depreciation means what? Decrease. So it will come under which side? Debit side. See, asset decreased. Then investment means what? Asset are to be revalued at 50. Revalued at 50 means go back to your balance sheet. What is the investment? 40. Now it is what? 50. 10,000 increased. Increase means asset increase, credit side. Then provide 2,000 for outstanding salary. Outstanding salary means it is an income or expenditure. For you, it is expenditure because you are running a partnership firm. You have to pay salary of 2,000, not yet paid. That is called as outstanding. So there is outstanding salary of 2,000. So we have to consider 2,000 as outstanding. Now, we are done with all this revaluation account, partners capital account, new balance sheet. We are supposed to prepare. Now, in this, come to revaluation. See, always remember you have to mention debit and you have to mention credit. Amount is in rupees. Amount is in rupees. You have to mention there itself. Now, in this, they have given furniture revalued. Yes, we have taken. Salary outstanding, we have taken. Then building 22,000, investment 10,000. We have considered everything. So building is where investment is revalued and appreciate building. Appreciate means what? Increasing. So we have increased 22. Which side is more? Credit side is more. 22 plus 10, it is 32. Here also 32. 32 minus these two, you will get 18,000. What is the ratio they have? See, admitted, and they have given any ratios in this. They have not given any ratios, so it will be what? Equal. So it will be what? 9,000 and 9,000. Remember, in the question paper, they have not mentioned any ratio. We have to assume that the partners share their profit and losses equally. Now, after revaluation, what is the next one? Partners capital account. Under partners capital account, first we have to go with what? Balance brought down. What is the balance brought down here? So in this, your balance will be what? Yes, your balance means 1,20,000 and 80,000. 1,20,000 and 80,000 balance. Then after balance, what is the next one? Is there any reserve? Yes, 50,000. Is there any profit? No. So, revaluation 9,000, 9,000. General reserve 25, 25. Bank account means what? Whatever the new partner bought. The new partner bought here 60,000 plus 20,000, 80,000. So, 60 plus 20, 80. In this, by C capital. In this what happens? 20,000 is what? Goodwill. Goodwill means what? For example, me and you running a partnership firm, we are adding one more person. If we are adding one more person means we should get some advantage. What advantage we will get? We call that person, we say that you give me extra money, we will add you to our partnership. He will bring extra money. What is that extra money? That is called goodwill. Clear? What is goodwill? The additional money bought by new partner other than his investment is called goodwill. That extra money will go to whom? Old partners. Who are the old partners here? A and B are called as old partners. Now, the addition money will go to old partner. How much it is? 20,000. Only the capital will go to C only. But our extra money 20,000 is there now. That will go to whom? Old partners. 10,000 for him, 10,000 for him. Hope you are clear. If you are written 10 plus 10, given by whom? New partners. That is the reason we have to mention on the debit side also. Credit side, A and B. Debit side given by whom? C. We have to follow that. So earlier it was not there. Since last 1 year, they have added accounting standard 26. Only changes what we are supposed to do is whatever bought by new partner 60 plus 20, put it in C column. Out of 80, remove that 20,000, take that 20,000, that extra money will be given to whom? Old partners. Which ratio? Old, whatever they have given. Normally it has to be given by sacrifice ratio, but in this problem they have not given old ratio and new ratio, so we have to go with equal. 10,000, 10,000 we have given. This 10,000, 10,000 given by whom? C. That is the reason debit side we have to mention that whatever he has given. Now, once we are done with this, all this, then again I'll go back to your question. So they have given that goodwill is withdrawn by the partner. Means, so new partner, he has deposited 10,000 to my account and 10,000 to your account. So that is what we have done, all the calculation, 10,000 to my account, 10,000 to your account. But what we did, we took the ATM card and we withdraw that money. If you withdraw that money, what you are supposed to do? You have to mention that bank account, withdraw. Clear? If you withdraw that money, you are supposed to mention that you have withdrawn 10,000 and 10,000. Hope you are clear. Good. Later, you have to check what is your total. Your credit side 90% will be more. Add everything. Add. Write the same value. From this, if you minus these two, you will get this value. 164 minus 10, 124 minus 10, 80,000 minus 20,000. Hope you are clear. Good. This is what your partner's capital account. What will come under credit side? Simple one. By balance, by general reserve, by revaluation answer, by bank account or whatever he bought by him, and by capital. Capital in the sense whatever C has bought. Hope you are clear. Yes, this is all about your partner's capital account. Once you're done with your partner's capital, the last one will be what? Balance sheet. Now, balance sheet as per the question. In this problem, balance sheet as on 31st March 2021, they have given. We are doing new balance sheet as on 31st March 2021 only, because when he is admitted, we don't know the date. That's why we have to do balance sheet as on 31st March 21, or leave it blank, balance sheet after admission. Clear? Now, so in the balance sheet, what we'll do? We will copy the old balance sheet, but whatever changes happened, we have to mention that. Again, I'll repeat. We have to copy the old balance sheet, but whatever changes happened, we have to mention that. Now, cash at bank. What is the old balance sheet? Cash at bank is 50,000, but new partner bought some money that we have to add. 50 plus 60,000, 1,10,000. Don't consider goodwill because it is withdrawn already. Stock. your old balance sheet, just you need to copy paste. If any changes happen, see, stock no changes, we write as it is. Debtors, there is a changes. Investment, yes, 40,000 is the old, but now it is how much? 40 plus 10, 50,000. Furniture 1,20,000, but there is a depreciation of 12,000 minus. Building 1 lakh, but there is an addition of 22. Everything you will get it in the adjustment. Clear? So, whatever changes happen, we have to revise that and write. Now, stock as it is. Furniture 120 minus 12, 108. Debtors as it is. Building 1 lakh plus 22, 122. Investment 40 plus 10, 50,000. Now come to your liability. Creditors as it is. Capital, it is nothing but 1, 2, 3. New capital. Outstanding salary also done. Hope you are clear. As total everything, it is 4,80,000 and this is 4,80,000. Once if it is done, we'll go to next problem. Before that, hope you understood what is partners capital, what is balance sheet. Before that, we started with revaluation account. We done with revaluation account also. XYZ are partners sharing profit and losses in the ratio of 2:2:1 respectively. Their balance sheet as on 31st March was as under. Everything is given. Yes, this is a balance sheet as on. So it is done. In this, Z retired. See, the second question will be what? After admission, the next question will be retirement. Earlier, it was not like that. Admission and retirement, out of two, they used to ask any one. But from this year onwards, you have admission of your partner as well as you have retirement of your partner. Both you are supposed to attend. Then, stock to be increased. Revaluation procedures same to same. Stock to be increased, maintain PDD, then depreciate machinery. Building are revalued, goodwill of the firm valued 15,000. Prepare revaluation, partners capital, balance sheet as it is. So PDD in the sense provision for doubtful debts. Now, see revaluation account, same procedure, debit and credit. Now, in this, stock to be increased, increase, asset increase means we said, credit side. So stock is done. Maintain PDD 10% on debtors. On debtors, calculate and write. Depreciate machinery and furniture by 10%. Depreciate means what? Decreasing. Machinery and furniture, it is done. All the calculation I have given there. Building are revalued at 60. What was the value? The value was 50,000. Now it is how much? 60,000. So the value is what? 60 minus 50. The difference is 10,000. Everything is done. Yes. What is the total? 14,000. Right? 14,000 minus all this, you will get 9,000. So ratios are given. Yes, they have given. The ratios are 2:2:1. So 9,000 into 2 by 5, 2 by 5, 1 by 4. Why it is 5? 2 plus 2 plus 1, it will become 5. That is a ratio. Now, we are done with revaluation account. Hope there is no doubt because we have followed the same logic, same procedure. Partners capital. First, we'll go with balance brought down. Yes. Revaluation, your answer. Reserve fund, your balance sheet one. See, in the balance sheet, you have reserve fund. You have to show profit also. Your P&L account. There is a common procedure always. What will come under capital account? Remember, one is your balance brought down, your revaluation answer, your reserve fund, your P&L, if there is goodwill. Then, up to this we have done. Goodwill is what? Just go back to your question. Goodwill of the firm is 15,000. Now see, 15,000. Who is retiring from this? Z. Z means last person. So, it will be, what is the ratio? 1 by 5. So, how much you will get? You will get 3,000. This will be divided into 2:2. 2:2 means what? 2:2:1. 1 is done. Now, the old partners. 3,000 2:2 means 1,500, 1,500. So it will be 1,500, 1,500. Hope you are clear. So I consider ABC because it is a common, but you have to mention in the examination as per the question X, Y, Z only. Now, so what is the total? These are the total. Write the same total here. Now, along with as per the AS 26, what you have to do? Whatever you have written goodwill here, opposite also will come. 1,005, 1,005. Now, what is the difference? Same answer. This minus this minus this, your answer. Hope you are clear. The last partner will not come under balance carried on because he is no more partner for the partnership. He is retired. Means this has to be considered as loan account. Hope you are clear. There is the only changes you will get in this. And under admission of a partner, we used to divide only for 2 partners. But in this, all the 3 partners will get all the benefits. Now, once you're done with this, your balance sheet is the easiest one. As I told you, check your old balance sheet, copy, paste. Any changes happen, make the changes. Now, cash and bank as it is. Debtors, make the changes and write. Stock, same. Machinery, make the changes. Furniture, make the changes. Building, make the changes. With the appreciation, everything. I'll show you how to do that. Cash and bank as it is. Debtors, 40 minus 2, it is 38. Along with that, we have one more. One more is what? PDD is around 2,000. So, debtors is 40,000 minus 2,000 and 2,000. The answer is 36. And stock. Stock, it was 20,000, but in the adjustment they have given stock is to be increased by 20%. So that is the reason. Stock 20,000 plus 4,000. The answer is 24. Similarly, if it is appreciated, add. Depreciated, minus. Machinery also same. Furniture also same. Building also same. It was 50,000 plus 10,000. The answer is 60,000. Hope you are clear. Machinery and furniture, there is a depreciation 20 minus 2, 10 minus 1. We have done that calculation. Add everything, you will get. Creditors as it is, capital, new capital. The Z loan, it is nothing but this answer, this answer, this answer. If you add everything, you will get 1,67,000. Hope you are clear. This is all about your retirement of partner. You learned what is non-profit organization. You learned what is the admission of a partner. You learned what is retirement. In the last session, your model paper part 3, you will learn dissolution, ratios, issue of shares, debentures. Debentures is not much important, but just we'll work out one problem on that. But these are the things you are supposed to remember for your examination. Now, please take a screenshot of all the question with solution so that you can work out at home. So, this is your first question, non-profit organization, your question adjustment with logic, your solution part 2, next question, your adjustment, your revaluation account, partner's capital, balance sheet. Next one, retirement of a partner, adjustment, revaluation account, partner's capital account, balance sheet. And this will be your dissolution of a partner. Just I'll give you the question. You try to work out at home. In the next session, I'll explain you how to do this problem so that you can match your answer with my answer. So, easiest one, whatever the complicated things we have completed, rest whatever we do, everything is easy. Your ratios are easy. Just you need to remember the formulas. Issue of shares, only journal entries. You need to remember that. Dissolution, it is a copy-paste work. Easy. There is no ratios, nothing under dissolution. So, the rest of the things are easy. Along with that, we left out with POQ. We'll come back with POQ questions also. Yes. Now, So these are your dissolution of your partner. We'll come back to this. Yes. So these things we'll do it in the next class. So your part 2 is more important. Why? Because how many questions you are supposed to attend for 12 marks? 4. Out of 4 we completed 1, 2, 3. One more to go. That will be done in the next session. So please work out all the problems whatever we have done in today's session, because your model paper is 99% sufficient for your final examination. Only the 1 mark and 2 mark will be changed. For that, one more class I'll do. In that, I'll highlight whatever 1 mark question and whatever 2 mark question you are supposed to learn. So till then, please work out your model part 1 and part 2. We'll come back with part 3. Thank you.